Hello, welcome to iThrive Ideas. On December 22nd, 2017, President Trump signed the Tax Cuts and Jobs Act. The new act is unquestionably the biggest tax reform in over 3 decades and has consequences for almost all sectors of the American economy. We have a lot to digest, but wanted to share the most important provisions that will affect our clients. Number 1, personal tax brackets. The top tax bracket for single and joint filers is reduced by almost 3%, down from 37%. For single filers, the income threshold for this bracket is now $500,000, and joint filers is now $600,000. Number 2, standard deduction. Now $12,000 for single filers and $24,000 for joint filers. Number 3, personal exemptions have been eliminated for 2018. It used to be $4,150 per person. Number 4, child tax credit. Those making less than $400,000 as joint filers can take a $2,000 credit per child. Number 5, 529 plans. Used to only be for undergraduate education, but now can be used for private K-12 education expenses. Number 6, estate tax. Doubled the exemption to $11.2 million per person and $22.4 million for couples. Number 7, corporate tax brackets. They are lowered from the old maximum rate of 35% now to 21%. Number 8, for small business owners, if you are considered a pass-through entity such as an LLC or S-Corp, meaning the income from your business is reported on your personal return, you now will be able to deduct 20% of your income. This could be a huge benefit for business owners. In the past, they would have paid $39.6 in federal taxes on this income. The final bill did include an income limit on deductibility for professional service firms. This includes services in the fields of health, law, consulting, athletics, financial services, and brokerage services. The 20% deduction is not available for service businesses if their income is over $415,000 for joint filers or $207,500 for single filers. Number 9, alimony. If you are getting divorced in 2018, starting in 2019, alimony will no longer be taxed to the recipient and deductible by the payer. Number 10, mortgage interest deduction. You will now only be allowed to deduct interest on loans under $750,000. Number 11, home equity lines of credit. You can no longer deduct this interest. Number 12, state, local, and property taxes. You can only deduct up to $10,000. Number 13, medical expenses. Now you can deduct expenses greater than 7.5% of your income. Number 14, Obamacare penalty. The new law repeals the penalty on those without health insurance. 2017 is not over yet. You may want to do a couple things before the new law is in place. Number 1, pay your property taxes in advance in 2017 if your county allows. Number 2, pay your January 2018 mortgage payment in 2017. Doing so may allow you to deduct more interest. Number 3, make your charitable contributions before year end. Many people may no longer itemize their deductions and benefit from taking the contribution in 2017. Number 4, defer income into 2018 if you feel you'll be in a lower tax bracket next year. A lot of planning ideas will be generated from the new law. We will be sure to communicate any opportunities to you throughout the year. Should you have any immediate questions, please reach out to our office. We hope you enjoyed this iThrive idea. Please subscribe on our website at www.thrivewealth.com. And on behalf of Thrive Wealth Management, I want to wish all of you a happy holiday and healthy new year.